I'm Emily Chang, and this is the best of Bloomberg Technology, where we bring you all our top interviews from this week in tech. Coming up in the next hour, volatility is the main headline, with Apple and tech at large leading the way. We break down tech's role in the slump. Plus, Facebook divided. A new report of tension between Zuckerberg and Sandberg. How are the troops responding? And almost a year ago, Bitcoin hit the $20,000 mark. It has now tumbled more than 75% from its peak after cryptocurrency's best days come and gone. First to our lead, the tech rout in the stock market. Combined, Apple, Amazon, Facebook, Netflix, and Alphabet have lost over $800 billion since the end of August, putting Silicon Valley on edge and raising concern. Have we reached peak tech? Tuesday, we caught up with Bob O'Donnell, Technalysis Research President, and Jim Paulson of Leuthold Wheaton from Minneapolis, who says tech regulatory risks are just beginning.
I think the biggest thing in the room is that the U.S. economy is probably headed for a fairly significant slowdown, not necessarily a recession, but I think growth is headed towards 2% or less, and that's more than Wall Street expected for the slowdown. I think that's why this isn't just a tech event, it's an entire market event, and it goes beyond the stock market, too. There's falling commodity prices, there's blowing out in bond spreads, so I think there's recession fear. But certainly what's added fuel to this fire is that the leadership, the place where everyone has money, the FANG stocks has started to really unravel, and that's probably generated more fear than having the rest of the stock market fall. I don't think we're going to have a Christmas rally. I think ultimately we might have a capitulation panic here, maybe before the year is over, where this thing goes below the overall stock market goes below the lows we hit earlier this year, and probably goes much lower and creates panic about imminent recession and the end of the bull market. I think that could be a good buying opportunity again, but we'll have to wait and see.
Bob, is the fear warranted or overblown?
Well, short term, I think it is warranted, because I think we've been living in an era where there have been unrealistic valuations for a lot of these big tech companies. And I think it's finally coming to roost. I think we have to pull back and look at this more macro level, because I think fundamentally, we've had these companies build up valuations that most people said this is just not realistic. So in a way, it's not surprising we're getting there. We're finally seeing a mature tech industry that's being perceived not as a teenager, but as somebody in their 30s and more mature in terms of their perspective on the world. And so I think all of these things influence this. And fundamentally, these are still strong companies long term, but in the near term, I think these valuations needed to be corrected, and the industry, or Wall Street, is taking advantage of this turn down to readjust these valuations.
So, Jim, question there. Is this about valuation, or is this about the sustainability of these business models? I mean, if people aren't buying as many iPhones, or people aren't buying into Facebook, isn't that a problem?
I think it's more about the latter. I think it's more about not so much adjusting valuations as it is adjusting growth rates for the industry as a whole, as well as for these popular companies. I'm not a tech expert, but it just seems to me that the pace of innovation in technology has really slowed from what it was that really drove this. The last big thing, at least from the outsider view, is the iPhone, and the iPad was big, but eventually that just becomes a bigger iPhone, and the iWatch really has not been earth-shattering, and things like Twitter and Facebook are hugely popular, but they basically have been the same now for a period of time. And I think that the constant pace of innovation to more dramatic products that drove demand, have-to products, I think has slowed, and it really brings into question not so much valuation, but what growth rate are you going to put on a company like Apple? Is it hitting the IBM, Microsoft mature cycle where you have to downgrade that? There's also challenges to the entire internet. Who gets to decide what constitutes hate speech, or what constitutes fake news or manipulation, or is it all just free speech? Are we going to have the internet be open, or is it going to be regulated, and who gets to be the moral authority to do that? The decisions on that are greatly going to affect the business models of a number of these companies, no doubt. Not to mention, how much can you use user information in reselling, for example. There's challenges challenges to Amazon monopoly status, much like there was to Microsoft in the past. So I think there's just a number of challenges to an industry that was way overowned from an investment perspective. And when you put those two together, it's a challenge for that sector as well as the overall market.
Bob, how big a threat do you think regulation is, or is it more about, trust in these companies? If people start to fundamentally question, do I want to share my data with Facebook? Can I trust them? Well,
I do think regulation is an issue for Facebook. I'm not as concerned that regulation is an issue for any of the FANG stocks.
Despite the monopoly problem?
Yeah, I mean, I think there are issues, and I understand that there are concerns around specific areas and the rate of innovation. Fundamentally, if you look at what's going on in tech, there are actually a lot of very interesting developments, but they're taking longer to play themselves out. And the growth expectations have been what's been called back. And these valuations were based on growth expectations that could not continue forever. And so I think what we are seeing is, yes, those growth expectations are coming down, and there's a recognition that they can't possibly have continued. But there are things coming that I think there are going to be some interesting things in 2019. Foldable phones, for one. I know a lot of people have their doubts.
You're bullish on foldable phones. I'm not so sure. I'm not so sure.
Well, here's the thing. I mean, all kidding aside, the truth is the general market has been concerned with smartphones being the last big innovation. So I'm saying, look, is there a different way to think about these devices? And I actually think it's an interesting category. It brings a wow factor back in that we haven't had in a while, and it gives people a new way to consume even services, things like Netflix, on different types of devices.
That was Jim Paulson of Luthold Whedon and Bob O'Donnell of Technalysis Tuesday. Meantime, the gloom around the global electronics industry getting gloomier, this time with Foxconn. The biggest assembler of iPhones is aiming to cut $2.9 billion from expenses in the next year, citing a very difficult and competitive year ahead in an internal memo. The company also said the iPhone business will need to reduce expenses by $900 million next year as it plans to eliminate 10% of non-technical staff. The news follows a bad week for Apple, as we have mentioned, after 4 suppliers cut their revenue estimates because of weak iPhone demand. Bloomberg Opinion's Tim Kolpin joined us from Taipei Wednesday to discuss.
50% of Foxconn's revenue does come from Apple. So, of course, they are the #1 supplier. They are very important to Foxconn. But in fact, 6 of the $20 billion in cuts is in the iPhone division, the part that assembles iPhones. So there's a lot more in other divisions. What that tells us is this is not an iPhone-only problem. It's not just iPhone-specific. It's broader. Foxconn's catalog of clients includes HP. It includes Sony, Nintendo, Cisco, Dell, a very, very, very long list of international names. So they're all impacted, or certainly they all feed into this wider issue that we're seeing in the electronics industry, and Foxconn is the one company that gets hit by all of it.
What is the wider issue? That people just aren't buying hardware anymore, or that the market isn't growing as much as it has been?
It's all of those things. I mean, we have a macroeconomic headwinds. A lot of people are getting caught up in, trade tensions, US-China tensions and so forth. It's actually bigger and deeper than that. That's in a way a smokescreen. It's a distraction. We know, for example, that, Apple itself is trying harder and harder to sell more units. And in fact, in the last earnings, they said, we're not going to tell you how many we ship anymore. We're only going to focus on revenue. So that kind of tells you that in future, it's not going to be good news on the shipment side. The smartphone market overall, it's reached its peak in terms of growth numbers. Sure, more and more people will continue to buy smartphones, but not at the same level. PCs are not really back in vogue, so we're looking at other areas of hardware, IoT products. The Apple Watch might take up some of the slack, and of course things like servers. A lot of the devices that are being made and being sold are stuff that consumers like you and me never see. They sit in server farms and they serve up, Netflix videos and YouTube videos and Spotify music. We never see that hardware, but it is there. But if there is a slowdown elsewhere in the industry, say in the internet era, in Spotify or Facebook or Google, if any of those show slowdowns, then we could see that impact wider and wider. And again, it comes back to Foxconn. Foxconn is the company that has its finger in all of these companies because it's the largest manufacturer. It does something for almost everybody.
Bloomberg Opinion's Tim Kolpin in Taipei. Meantime, third quarter revenue soared 49% at Xiaomi. The Chinese smartphone maker relied on its presence in emerging markets to offset sputtering demand for mobile devices. Shipments rose 21%, while the global smartphone market shrank 6%. Coming up next, will those who hold the power at Facebook ever change? Our next guest says it has to. We speak to the CEO of North Star Asset Management, Facebook shareholder Julie Goodrich, next. And if you like Bloomberg News, check us out on the radio. Listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Now to our continued coverage of Facebook in crisis. While the critics are out in full force following recent reports of high-level mismanagement at the social network, the board still has CEO Mark Zuckerberg and COO Sheryl Sandberg's back. In a public statement last week, the board said to suggest that they knew about Russian interference and either tried to ignore or prevent investigations into what happened is grossly unfair. In the last 18 months, Facebook, with the full support of this board, has invested heavily in more people and better technology to prevent misuse of its services, including during elections. We should note Zuckerberg and Sandberg are members of that very same board that is standing behind them. Now, my next guest has long been sounding the alarm for a change in the power structure at Facebook. Julie Goodrich is the CEO of North Star Asset Management, and they currently hold over 37,000 shares in the company. For years now, they've been clamoring for a one share, one vote policy at Facebook, something Zuckerberg has worked to avoid. She joined us from Boston Monday.
This is the problem with corporate governance when you've got an insider board, and really Mark Zuckerberg has the power to fire any one of his board members at any time. So what that does, as you probably understand, is it takes away, sort of the sense of autonomy that other board members have if they're at all concerned about maintaining their relationship with the company. I think it's problematic.
Do you sense, Julie, an opportunity now to re-agitate for this, and do you have any plans to do so?
Well, I mean, we've got this same shareholder resolution filed. So just so folks know, I mean, and probably everyone listening to this does, but Mark Zuckerberg has primarily Class B shares, which give him 10 times the voting power. And so what that means is that he controls 51% of the vote, but he only owns 30% of the stock. So that's a problem for other shareholders. So, for example, in the shareholder resolution that we filed last year, asking for there to be one vote per share, so to only have one class structure, Class A. What ended up happening was we only got overall 21% of the vote. But if you looked at all the other shareholders who voted in favor of our resolution that were not insiders, we actually received 81% of the Class A share vote, which is really high.
So you've got other investors out there calling for an actual board shakeup, calling for Mark Zuckerberg, for example, to step down as chair. Take a listen to Jonas Krohn here from Trillium Asset Management.
It needs to be somebody that's really genuinely independent, somebody that has gravitas and can be able to speak with authority and with the confidence of the rest of the members of the board. I think it needs to be somebody that has a broad diversity of experience, clearly tech experience, but I think also there could be some real merit in having somebody from the traditional media, the newspaper industry that has a deep understanding of the role of media in society. Somebody with some time on their hands, because I think by all accounts, this is going to be a long few years ahead of the company.
Julie, Zuckerberg responded to that saying, this is not part of the plan as of now, but would you like to see him step aside as chair?
Actually, the person I would like to see step aside is Peter Thiel. And I would like to see the vote structure changed. I actually think it might not be great for him to completely step aside, although I would certainly vote in favor of that if that's, we would support, Trillium on that resolution. The issue for me is that when you take a founder like Zuckerberg and you have them step aside, it means something very scary for all of the shareholders, right? And I actually think that what he needs is better corporate governance. He needs to let go of his insider shares and go back to a one vote per share structure. Even when the Times tried to throw Sheryl Sandberg under the bus, these guys are responding to issues that occurred in the course of doing business over several years. What's scary about it is that they didn't anticipate that these kinds of things could happen. That's the scary thing, where you look at somebody like Peter Thiel, who in fact was very instrumental in supplying, Cambridge Analytica through the other company that he is the CEO of with, ways to sort of access this information and to get into, sort of infiltrate the Facebook system. And he's the one that could have really said, hey guys, we want to be careful about our governance here. I think it points. Sorry, go ahead.
Hang on, before we, I want to dig a little deeper into your thought here on Peter Thiel, who is very controversial on the Facebook board for a number of reasons, not the least of which is his support for President Trump. Mark Zuckerberg has come out and said that he supports Thiel remaining on the board because he adds to a diverse set of views that they would like to see represented on the board. I believe you're talking about his association with Palantir, where he's a co-founder. He's not the CEO. But talk to me a little bit more about why you want to see Peter Thiel, of all of these board members, many of whom have presided on the board over these many years, to step down.
I think because when he came out with his, outrageous support, hugely public support, really, of Donald Trump, he shines, ends up holding himself high as, a representative of Facebook. Now, of course, it wasn't Facebook that came out with that, but basically what's happened over the last several years is Facebook, by virtue of the way it started to change the way it did business, and rather than just taking regular old advertising for people, people who were looking for pairs of shoes or computer equipment or something like that, they started really taking money for political ads. And, that is very similar to the way that Peter Thiel sort of came out publicly about his support of a political candidate. I really don't think, and this is of course all since Citizens United, but I really don't think it's appropriate, and in fact it's illegal for Facebook to have taken ads from a foreign power to support or in any way have a say on any sort of elections in the United States of America. It's not legal to do that. So I don't know if they need like a corporate governance guy on there who can really, or a government affairs person who really understands how securities laws work. If they need somebody to think about, okay, are they making so much money from running political ads that they need to keep running political ads for people and running commentary that's from paid sources around political matters. I don't really think that's how Facebook imagined itself, and I'm sure that that's not how all the what are now middle-aged people who are still looking on Facebook and still using it. I really don't think that that's why they go on Facebook. It's one thing to report the news; it's another thing to create the news.
That was Julie Goodridge, CEO of North Star Asset Management. Coming up, it is now NASA's turn to go after Elon Musk. Why? That story ahead. And Bloomberg Tech is live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network, TikTok, on Twitter. This is Bloomberg. NASA is going to launch a safety review of Boeing and SpaceX, the two companies it has hired to fly astronauts to the space station. According to the Washington Post, the review was prompted by the behavior of SpaceX's founder, Elon Musk, who was seen smoking marijuana on a podcast that went online. SpaceX says it actively works to promote workplace safety. Alexander Weigers is a forgotten figure in Silicon Valley's history. He was an artist, a blacksmith, an aerospace engineer, and more. A true Renaissance man. But if one art dealer has his way, he won't be forgotten for much longer. Bloomberg's Ashley Vance has the story.
This is the story about a forgotten genius. A gifted sculptor, artist, and modern-day Leonardo da Vinci, whose UFO-like invention was the realm of pure science fiction. But it's also a story about this man, his fixation with the past, and living on borrowed time. This is the guy he wants everyone to know about, Alexander Weigers.
This is probably the most photographed Weigers so far.
Randy discovered Weigers in 2008, when for the first time, his sculptures were put on sale. Randy snapped up the lot. As an art dealer, he had dreamed of hitting it big by finding an unknown artist and making him famous, and figured that Weigers was his man. During his hunt into Weigers' life, Randy discovered something extraordinary. Hand-drawn designs for an exotic aircraft dating back to the 1920s. Alex appeared to have invented the very first flying saucer.
That was an amazing find in itself. When I saw the blueprints, it was undeniable that he was the creator.
Weigers called his futuristic flying machine the Discopter. Designed to take off vertically and float on a cushion of air, it was a unique concept, and one he thought cities of the future would make full use of. Weigers patented the Discopter in 1944, and then tried to sell it.
He starts sending all of these letters to all kinds of companies, telling them about his invention.
As word of the Discopter began to spread, Alex felt the U.S. military stole the idea. It was an accusation they denied. But for Weigers, evidence of the theft was there for all to see, as images of his flying saucer seeped into popular culture, influencing everything from architecture to cars and movies.
A two-seater, ready soon, may be the car or chopper of the future.
There's this whole flurry of stories. Weigers, first with saucer. A Dutchman says he designed flying saucer 23 years ago. The man who invented the flying disc. He didn't really seem to be after compensation as much as recognition that he'd done something important and wanted a bit of credit for it.
In Weigers, Randy discovered a kindred spirit, a man who chose to live by his own rules and who created a legacy using his own two hands.
What would you say to Alex if you saw him now? I wondered if you had dreamed about that moment or anything.
I did dream about meeting him.
Yeah?
Figured it was the spirit of Weigers, basically telling me I'm doing the right thing and I should continue with my mission.
That was Bloomberg's Ashley Vance. Coming up, it has been almost a year since Bitcoin's sky-high $20,000 mark, and now it's piercing the $4,000 mark. What is behind the plunge? We'll discuss next. This is Bloomberg. Welcome back to the best of Bloomberg Technology. I'm Emily Chang. Well, that cousin who peddled Bitcoin to you last Thanksgiving has some explaining to do this year. This time last year, recent adopters were bragging of their good fortunes at the dinner table as the cryptocurrency was in the middle of a bull run that would see it more than double to a record $19,511 just before the Christmas season. This year, however, the story is quite different. Bitcoin is piercing $4,000 and doesn't seem like there will be a turnaround anytime soon. We caught up with BitPay Chief Commercial Officer Sunny Singh Wednesday to discuss.
Bitcoin has become mainstream adoption around the world. It's got great brand recognition. And again, we shouldn't look at the price so much because it's what's really happening behind the scenes. And I don't think you're going to see any price movement up or down, really, as I said, for a long time until there's really some new direction. And that would mean things like Fidelity launching their product next year, or Bakkt launching their product, or Square launching a product, or BlackRock launching an ETF. Until those products come out, I don't think there's really any much market catalyst moving either way.
Now, what Jamie Dimon has said about Bitcoin has gotten a lot of play, but I think right now it bears worth re-listening. Take a listen to what Jamie Dimon had to say about Bitcoin last year.
It will blow up. China just kicked them out. If someone's going to lose money somewhere else, it will be, probably don't ask me to short it. I'm not going to do it. It could be at 20,000 before this happens, but it will eventually blow up. It's a fraud.
Now, he later said he regretted saying that, but I wonder right now if it looks like he's being vindicated.
So I completely disagree with him on the fraud comment. Again, price can go up and down, and obviously anything that goes up that fast will obviously come down, so he's right about that. But the fraud thing, I completely disagree, and I would imagine next year when Jamie Dimon sees Fidelities of the world launching products, that his bank will also be launching a product too as well. When you see companies maybe in the Bitcoin space doing IPOs, Silvergate today announced an IPO, which is a bank that focused a lot of crypto, a lot of Bitcoin miners, maybe companies like Coinbase do an IPO next year. JP Morgan will try to get Coinbase's business, probably to lead the underwrite. So I think he'll be changing that tune pretty soon next year. But again, it might be Q1, Q2, because these big companies take a long time to launch their products.
Do you think that we should be starting to look at cryptocurrencies as different currencies? Do you think some of the other currencies will actually break away from Bitcoin, or are they all basically the same?
No, I think there's a big night and day difference between Bitcoin and everything else. Bitcoin is the 800-pound gorilla. That's the one that has the mass network effect. That's the one that the traditional financial incumbents are building products around. The other ones, I don't know what's going to happen to them. You see the ICOs being ruled by the SEC right now, having some rulings about that. I think it's safe to say the ICO market's pretty much dead right now, and maybe a couple will survive. I'm not sure, but none of them are going to survive unless Bitcoin survives first. So that's the one everyone's focused on.
Okay, so that's what you're saying this year. What does Uncle Sonny say next Thanksgiving?
I would think next year we'll see actually maybe an ETF launched by a regular BlackRock type company, a Fidelity product, possibly a Square. You're going to see traditional incumbents fighting the BitPays, the Coinbases of the world. So it should be an exciting time, actually. And again, that's just in America, but around the world, you're seeing adoption and use cases by Bitcoin. So BitPay will process, again, over $1 billion this year. Even though the price of Bitcoin dropped 75%, we were still flat on processing as we processed over $1 billion last year because people are actually using Bitcoin, whether it be a store of value, a way of payment transact. There's just different use cases for it all over the world.
Where's the price next year?
I would say if these traditional incumbents do launch their products, actually, you would see price maybe around 15,000, possibly even 20,000 by the end of next year. But again, that depends on when these traditional incumbents launch their products, and they move very slow because nothing moves fast in fintech.
That was BitPay Chief Commercial Officer Sunny Singh. Coming up, Airbnb is one of the most anticipated IPOs in 2019, but could a crackdown on illegal renting across the U.S. stand in the way of its public debut? Plus, Weight Watchers is an iconic American company, but it's got a new name and a new approach to doing business. So how does tech fit into that vision? We'll find out. This is Bloomberg. 2019 is expected to be a big year for IPOs, from Uber to Airbnb. In a public memo last Friday, the home-sharing startup announced more than $1 billion in third-quarter revenue, calling it its strongest quarter to date. Since 2008, the company has become one of the most valuable startups in the U.S., with a current valuation of $31 billion and listings in 191 countries. We spoke with Airbnb's global head of policy and public affairs, Chris Lehane, on Monday and started by talking about how Airbnb has been handling the deadly wildfires that have been raging across Northern California.
Obviously, what we've seen in Northern California and Southern California, is just devastating. Obviously, we've seen some tremendous heroism from the first responders, from just everyday people. And we've been just honored by our hosts. We've had over 2,500 hosts open up their homes to over 1,800 people who've been displaced by the fires. That's not really Airbnb, that's our hosts. And we're grateful for that. I think they're appealing to the higher angels that are in all of us, and it's just awesome to see amidst all of this catastrophe. So thank you for asking. Obviously, we see the air here. We're feeling it here in San Francisco, but nothing like what people are going through on the ground.
Right. Our hearts go out to all of them. I do want to talk about growth. Yep. You're going into the holiday season, typically a very big season for Airbnb, and you just reported a record quarter. You say you have record bookings over Thanksgiving weekend. How long can you sustain that kind of growth?
Well, as we released on Friday, significantly over $1 billion in revenue in Q3, our single biggest quarter ever. And we are blessed ultimately by this really significant and robust growth. But ultimately, that's tracking to the community model that exists on Airbnb. We only do well if our hosts do well, hosts only do well if guests do well, guests only do well if communities are benefiting. But that flywheel does create a network effect globally, and you can see that underneath these growth numbers. 91% growth in Beijing, right? Over 70% growth in places like Mexico City or even Edinburgh or Birmingham in England, just to pick out some from around the world. But ultimately, what's really underlying the foundation for all of that is that people are looking for this type of travel, right? More people are going to be looking to do home sharing type of travel, people-to-people travel tomorrow than today. Now, this is not new, right? Abraham Lincoln, Gandhi, they did home sharing. But in particular, this is what consumers are looking for, particularly those millennial consumers who are going to be 75+% of all consumers going forward. This is how they like to travel.
Give me an update on Beijing, because, you did have a head of China that resigned there over a Me Too issue. I know that one of the founders, Nate Lecharczyk, went last year. But you mentioned 91% growth. You're starting from a fairly low bar because the business was small to begin with. But how do you expect that to expand?
Yeah, again, looking at our global numbers, what we're seeing in China really does reflect the same thing that we're seeing globally, which is we are blessed with this growth that is being driven by that network effect that exists locally. But what we're seeing in China is really interesting. It's the same sort of underlying dynamics and trends that we saw with the business earlier, which was when Airbnb was first launched. The majority of the users were millennials. If you look at our China market right now, about 85% of our consumers are millennials. Similar trend, keeping in mind that there are 400 million millennials in China, right? We are really, the significant player in what's called the outbound travel, people going from China abroad. But what's happening is they come back and then they begin to travel domestically, and Airbnb begins to grow as a result of that. And so the type of growth we've seen in Beijing is actually replicated. It's similar numbers depending where you are looking throughout the country. But look, at China is a place you have to get up every day and you have to work incredibly hard. We do have a president of the business who's from China, based on the ground there. We have an incredible team made up of Chinese folks who are on the ground in Beijing and other offices around the country. Feel good about where we are, but know that we need to keep working at it.
You quietly removed some listings in the Jewish West Bank settlements, and this is something that pro-Palestinian groups have been pushing for a long time. But why now?
Yeah, look, this is, I'm not the first one to say this, obviously, an incredibly complex part of the world, an incredibly difficult issue. This first came up early in 2016 when we were really first confronted with questions about 150 to 200 listings that exist in the West Bank, the occupied territory. And really, since then, we spent a lot of time trying to understand the issues, talking with experts, stakeholders, and put in place a framework to help us really sort of reach a decision here. And that framework includes understanding that every situation is case by case. space, talking with those experts, our stakeholders, taking a look at the degree of human suffering and what's contributing to it, and really looking at trust and safety issues, and ultimately whether our product, our business, our listings are contributing to the core issues there. And using that framework, ultimately made the decision that we need to remove those listings. We say that knowing it's controversial, that we're not necessarily going to make anyone happy here. Look, I've traveled to Israel. It's an incredible part of the world with incredible people. And this is a really hard choice we struggled with. We're not a government. We're not necessarily the experts on this, but because we're in homes, we often get put into these situations and do ultimately believe, at a time when a lot of people are talking about, our tech companies, our platforms going to take responsibility, that we wanted to act as opposed to necessarily react to situations. And we use that framework to help drive that decision.
You've been looking for a CFO since Lawrence Tosi left. Still haven't hired one. Why is it taking so long?
Are you interested? Are you coming for it? Yes.
It might be a conflict of interest.
Just a little. We've had, not surprisingly, given the historic nature of the company, some of the issues that we have talked about, that there is incredible interest in this particular role. We've had incredible folks that we've had conversations with. I will be sure to let you know when we have reached a decision on it. But we've talked about the fact that we want to be IPO ready by 2019. We haven't announced if and when we would take the next step beyond that. But ultimately, we are going to be looking for someone who really does appreciate that community model, right? That we are looking to be a 21st century company, that we get growth in the following way. Do we deliver for our hosts? Do our hosts then deliver for those guests? Those guests deliver to the community. What's really interesting about the Airbnb model, and I think why we've gotten so much interest and why I think this is going to be an interesting role, is that ultimately if we drive a social value proposition, that actually drives our growth. And that ultimately comes back to the early question that you asked, which is how do we continue this growth? We continue this growth by delivering on that community model.
Right. You ended forced arbitration, not just for sexual harassment, but for discrimination, which is very progressive. We haven't seen other companies do that yet. How do you plan to handle this between hosts and guests?
Yeah, it's a great question, right? Our model is a little bit different maybe than some of the other sharing company models. Our hosts are really, our partners. We do have a really aggressive policy called We Accept, which broadly deals with discrimination types of issues. And you have to agree to those set of standards before you can even come on the platform. But as it relates to our employees, which is what we announced last week, I do think that is also another example of how we're trying to build that community model. Okay, I come out of Democratic politics originally in the U.S. I did a lot of labor politics when I was working in Democratic politics. And for me, it's just personally, it's incredibly interesting and I actually think really exciting to see that companies understand the value of their employees and their community. Employees are pushing for companies to be responsible. I think it's awesome. I mean, I think it's great that you have these employees and these companies understand they only succeed if they're able to attract and recruit these great candidates. And it's a pretty cool thing to see that beginning to develop and hopefully a good indicator of where we're going as a society.
You mentioned your time at the White House, which is a perfect segue for me because every time you come on here, I have to mention that you were the master of disaster, known as the master of disaster. So how would you master Facebook's disaster right now? Like, what are they doing wrong?
Well, I will be very careful here
able to contain this?
Because I obviously don't work at Facebook and want to be really respectful. I would say, without talking about Facebook specifically, but as a general approach, I do think ultimately people have to be comfortable with what their mission is, what their principles are, what their values are, and really do the best to try to proactively execute against those. We talked earlier about whether you're going to be proactive or reactive. And again, I'm not talking specifically about Facebook, just talking writ large in the context of how people should think about these things. At the end of the day, you have a North Star. Your North Star is your mission and your principles. Those only really are true and viable if you're actually executing against them. And that has to be when you have the hard decisions, right? It's really easy to say all those things when it's an easy decision. It's when you have a hard decision that you really get tested. And I remember working in politics. Politicians were always tested, not on the easy stuff, but in the cauldron of a crisis, because that's where your character really gets exposed and you have to make some decisions. I know some of the folks at Facebook at the top and throughout the company, I think really good people. And I think ultimately, they will be doing those. I think they have tried to do those and at some level have done some productive stuff. But obviously, I don't know what's going on there and I'm really not in a position to evaluate exactly what they're doing.
Airbnb's global head of policy and public affairs, Chris Lehane. Still ahead, Weight Watchers is no more. Instead, now rebranded as WW, the company is looking to woo new users with a new digital strategy around the globe. Our conversation with President and CEO Mindy Grossman is next. This is Bloomberg. There's a signal that T-Mobile's arguments for buying Sprint may not be winning over U.S. officials responsible for approving the deal or not. T-Mobile is now telling regulators the tie-up would help it compete more vigorously against rival carriers AT&T and Verizon. In September, T-Mobile focused on how taking over Sprint would give it an edge in quickly building a 5G network. Well, the company once known as Weight Watchers is in full rebranding mode. Now, WW, as it's called, is looking to 2019 as the year it tries to capture the holistic wellness space. Key to that is partnerships with startups like Blue Apron and a digital strategy targeting beyond its space as WW reaches out to young moms, dads, college kids, and more. We spoke with President and CEO Mindy Grossman.
There are so many avenues of work that are happening right now. And again, if you just look at the last year, we launched Freestyle, which is the best program and most efficacious program in the company's history for eating. We launched FitPoints 2.0, which took the science similar to what we do in nutrition and used it for customized activity. We are integrating active audio fitness within our app. We integrated Headspace for content. Very excited about our rewards program that has been in work for almost a year, just launched 4 weeks ago. Doesn't reward you for spending money, rewards you for everything you do on behalf of your health and nutrition, and you win wellness wins. And we're already seeing an increase of 20% of nutrition tracking and 80% of activity tracking. And then Connect Communities just launched in Canada. It's going to be rolling out to the rest of the world, and that's for people to be able to find and form. So we have a whole universe of activations that not only will happen between now and the end of the year, going into 2019, when we really do the big brand relaunch, but even from there, they're constantly innovating, and we have teams around the world, big teams in New York, in the group out here. We're looking to double our tech footprint out here. So it's been pretty exciting.
So there was a big run up in the stock, and the shares are down significantly since June. What do you think investors aren't getting?
You know, we have a lot of new investors, new coverage, and I think it's a matter of really educating everyone on the seasonality of the business. And I think that's been the biggest confusion. And you really need to look at our member base year on year versus quarter by quarter based on the business that we're in.
Because January 1st is the big day.
Well, that's certainly, you know, we're kind of wellness 365 now, but there's no doubt that January is just Pavlovian. People decide they want to get healthier. But it's important to note that our results this year have been fantastic. Our subscriber base is almost up over 25%, even in the last quarter. Sales at 17% year to date. Operating income significantly above where we've ever been. And we've hit every single quarter all-time highs for the company. So the team has done an incredible job, and it's a matter of just getting people to understand the trajectory of the business. I think the second thing is, as much as we've announced what has been launched and is launching, the reality is that the true brand launch and everything inherent in what we're going to be offering to the customer is really happening at the beginning of 2019, and that's what we've been preparing for and activating. And what we've already activating, we're already seeing the impact on retention and the impact on recruitment.
So you've got some new partnerships. You mentioned Headspace. There's Blue Apron. You've got, integration with the voice assistants. How do you think this will bring the business forward?
So if you look at where we've prioritized, it's will it recruit, will it retain, and will it elevate the brand? And when you look at partnerships like Aptiv and Headspace, we're providing even greater value for our members. Similarly with the rewards program, which we know will have an impact on retention. And then certainly with this move from not just being weight loss, but giving people a whole wellness platform, that's a very big recruitment message and allows us to have a much broader range of partners. So what we said is we want to own the healthy kitchen. And so our partnership with Blue Apron, we launched the first WW Freestyle Cafe in Barclays Center with Kat Cora. We have a whole line of kitchen products. Every single food product that we make, you don't eat Weight Watchers food. You can eat anything you want on Weight Watchers. But the food products we make in snacks and things like that have been 100% reformulated to reflect a healthy living brand. And that will be launched in all our direct channels in January. And then our first branded store for all our products will launch on Amazon at the beginning of February.
You're also a global company. You're in 11 countries. I mean, are there any plans to expand?
Yes. So what we've said, in February, when we came out with our Impact Manifesto and our new purpose, we inspire healthy habits for real life. People, families, communities, the world, for everyone. And that means the world. So today, about 70% of our business is in North America. Next three largest markets, UK, Germany, France, other markets in continental Europe, Australia, New Zealand. We definitely have a big opportunity, and there's a great need in both Latin America and Asia. So what we said is we will be doing the strategic work on what market entries will come next, and that by the end of 2020, we will start the development in new markets while we're building the markets we're in.
Our conversation there with WW CEO Mindy Grossman. And that does it for this edition of the Best of Bloomberg Technology. We will bring you all the latest in tech throughout the week. Tune in every day, 5 p.m. in New York, 2 p.m. in San Francisco. We are, of course, live streaming on Twitter. You can check us out at Technology, and be sure to follow our global breaking news network, TikTok, on Twitter. Have a wonderful holiday. This is Bloomberg.